We always appreciate you when you actually show up for us. Thank you so much. And I believe that may Allah subhanahu wa ta'ala continue to strengthen you. It's very important for all of us. Strength is what we actually seek from Allah subhanahu wa ta'ala to carry on his work and to be able to, for him to reward us abundantly. So I will give the floor for Doctor to give the keynote speech to this wonderful webinar. And I definitely know that he will be touching on some of the things that we will be expecting today from our wonderful facilitator. You have the floor, Doctor. Kindly unmute yourself and go ahead.
Thank you so much, Bro Mudathir. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wassalatu wassalam ala Sayyidina Mursaleen wa ala ali wa sahbihi ajma'in. Distinguished guests, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. And a very good morning to you all. And I would like to again welcome you to this event. It gives me great pleasure to be here today with all of you for the 6th African Islamic Capital Market Conference. And I know this is a pre-conference webinar. So this is part of the activities building up to the conference itself. And first and foremost, I would like to congratulate the Metropolitan Skills Limited and the Metropolitan Law Firm for organizing and hosting this pre-conference webinar. And I'm sure this webinar actually brings together stakeholders in the economic development of Africa to network, albeit, it's a virtual networking, to share experiences. And today we're focusing on Sukuk structuring, and as well create practical solutions toward achieving sustained economic growth and unlocking the prospects for African markets within the ambits of Islamic finance. I must admit that the theme of this conference and again, the main conference as well as today's webinar, I think the themes are actually strategic and relevant with the current global economic landscape post-COVID-19 pandemic. Now, let's go global before we come back to Nigeria. Basically, in 2015, the United Nations established a blueprint for addressing economic, social, governance, and environmental challenges, which is commonly known as the Sustainable Development Goals, the SDGs. The 2030 Agenda stated that we could be the first to succeed in ending poverty and saving our planet. However, this objective requires concerted efforts by individuals, governments, as well as calling on all businesses to apply their creativity and innovation to solve sustainable development challenges. As the largest economy in Africa, Nigeria has made progress in social and economic development over the last 2 decades. Since the year 2000, the federal government of Nigeria has adopted the Millennium Development Goals and embedded them within its national development agenda. Progress was made in several areas, such as reducing extreme poverty, improving health indicators on maternal and child health, and lowering infection rates for HIV/AIDS. This progress was supported by strong economic growth, averaging 2.66% from 2011 until 2023, while also increasing public resources. Ladies and gentlemen, together with all countries across the globe, Nigeria has embraced the 2015 SDG agenda to address long-term social and economic challenges, including several key issues of poverty and an inclusive economy, health and well-being, education, gender equality, and the enabling environment for peace and security, and partnerships. And I'm sure you are aware that all these are part of the SDGs. While modest progress has been made across the goals and indicators, challenges remain in the achievement of many of the goals. The confluence of various factors, including the global economic downturn, the dwindling oil revenues, particularly in the case of oil-producing countries, which includes Nigeria, and the still ravaging COVID-19 pandemic, has exacerbated an already challenging situation. Unemployment rate is soaring, and inflation is making it increasingly difficult for ordinary Nigerians to afford necessities. Nigeria has an unemployment rate of about 33%, which means that about 1 in 3 Nigerians is unemployed, which is concerning. This is really a concerning issue for all of us. Families are struggling to put food on the table, and access to healthcare and education is becoming more of a luxury than a right. Now, the key challenges faced by the OIC countries, including Nigeria, in developing the needed infrastructure are identified as a lack of funding, limited institutional capacity, vulnerability to political risk, weak legal and regulatory frameworks in some cases, and the environmental and social implications of any infrastructure projects. There are, however, significant opportunities to support economic growth and boost prosperity, increase trade, enhance social welfare, improve energy security and climate resilience, and improve regional integration. Indeed, according to the last ICD Refinitiv OIC Infrastructure 2023 Outlook, Nigeria's additional funding needs are higher than the average of low-income and developing countries, particularly on infrastructure sector, with the second higher funding gap in Africa after Egypt, with a projected domestic infrastructure gap that is between 2016 and 2040 of about 221 billion US dollars, with its largest sector funding gaps over that period being in roads, electricity, and telecoms. In addition to the infrastructure sector, the following sectors need to be taken into consideration as highlighted by the Nigerian Federal Ministry of Finance, Budget and National Planning in the Nigeria National Development Plan 2021 to 2025. Now, these include agriculture and food security, rural development, manufacturing, oil and gas, solid minerals, mining and steel development, culture, creativity, hospitality and tourism, health, education and human resources, and social development. Financing these spending needs is a formidable challenge. Room for additional borrowing is limited given Nigeria's vulnerability with debt servicing and non-investment ratings. We all know, I mean, the kind of the ratings of Nigeria, I mean, B minus, by some of the rating agencies. So, this kind of vulnerability with debt servicing and non-investment ratings with a stable outlook from respective rating agencies actually will actually affect, the funding options. In addition to more private sector participation, significant increases in domestic revenue mobilization are essential to meet the financing needs. Islamic finance provides a key opportunity to raise funds towards the SDG initiatives. Sukuk especially represents a financing instrument that could raise funds to deliver more infrastructure investment in emerging economies. It is also noteworthy to point out that increasing international investor demand for ESG and green products, which signifies the potential of Islamic instruments in the global landscape. In addition to that, most of the green projects are usually based on a pool of assets that fulfill the tangibility and Sharia requirements in issuing Sukuk. This actually enables tradability of the instrument on a secondary market. Distinguished guests, more and more governments globally are offering innovative green Sukuk initiatives, which channel Sukuk for climate-oriented investments and subsequently help bridge infrastructure and green finance. Green Sukuk can contribute to achieving good health and well-being, quality education, clean water and infrastructure, affordable and clean energy, decent work and economic growth, industry, innovation and infrastructure, sustainable cities and communities, responsible consumption and production, and climate action. According to the Institute of International Finance Sustainable Debt Monitor, the ESG debt universe hit $5.1 trillion in Q1 2023. This is up from $3.8 trillion a year ago and $2.3 trillion in Q1 of 2021. Amid the recent banking sector turmoil, ESG loan issuance fell sharply in Q1 2023, coming in at $40 billion, over 65% lower than in Q4 2022. In parallel, Islamic green financing is on an upward trend as many investors shift to allocating capital toward more sustainable business models. According to Fitch Ratings, ESG Sukuk maintained their strong growth in Q2 2023 with $30.5 billion outstanding. This is up 22% quarter on quarter. On the outlook, ESG Sukuk are around 3.8% of global outstanding Sukuk, which is expected to increase to cross 7.5% over the coming 5 years, according to Fitch Ratings. Excellencies, ladies and gentlemen, Nigeria, for one, is no stranger to the depths of Islamic finance globally. The growth of Islamic finance in Nigeria over the last decade has seen the country capture the highest value of Sharia-compliant assets. Nigeria's acceleration in Islamic finance is best exemplified by the issuance of its sovereign Sukuk. We've had a number of kind of issuances, and I'm sure the facilitators will be presenting on some of these, Sukuk issuances we had in the country. Since the debut of sovereign Sukuk in September 2017, whose benefit in terms of improved road infrastructure within and outside cities in Nigeria is clearly visible, the Sukuk has been commended as a viable instrument for financing infrastructure. The use of Sukuk has enabled timely completion of the designated projects, while also delivering the multiplier effects associated with construction of capital projects such as roads. Excellencies, ladies and gentlemen, one of the breakthroughs done by the Nigerian Debt Management Office is the listing of the federal government's 130 billion sovereign Sukuk on the Nigerian exchange and FMDQ starting on August 8, 2023. This listing demonstrates the federal government's dedication to developing critical infrastructure through innovative and cost-effective financing structures. Moreover, this idea had also been successfully expanding the range of financing options, the financial offerings as well, that are available to investors in the capital markets, as well as an effort to provide more liquidity to investors and promote price discovery. However, comprehensive reform efforts on multiple fronts are needed to significantly increase domestic resources to meet SDGs, including public-private partnership, the PPP. Given the sheer size of Nigerians' SDG needs, the contribution of the private sector to SDG projects is indispensable. The authorities should actually provide appropriate conditions for private investors to step up their participation in certain areas of needs that cannot count on adequate public resources. Apart from some local private sector efforts, much of these investments will have to come from abroad. Pursuing reforms that bring Nigeria in line with its peers will increase foreign direct investment by 3.5% of GDP by 2030, which we assume will be available for spending in health, education, and infrastructure. Excellencies, ladies and gentlemen, 13 years ago, in 2010, the International Islamic Liquidity Management Corporation, the IILM, started issuing its short-term Sharia-compliant financial instrument to facilitate cross-border Islamic liquidity management. For the benefit of those who may not be familiar with IILM's policy mandate, the IILM was established by several central banks, including the Central Bank of Nigeria, to create and issue Sharia-compliant financial instrument. And this is actually based on what you call an asset-backed commercial paper program. So what I mean here is the IILM Sukuk program is the only Islamic ABCP program in the world, which we call the asset-backed commercial paper. And this was established to facilitate effective cross-border Islamic liquidity management. Alhamdulillah, our Sharia-compliant instruments have benefited the Islamic finance industry globally in cross-border liquidity management since our inaugural short-term Sukuk issuance in August 2013. And to date, we have issued close to $100 billion across 225 Sukuk series. As you may be aware, the proceeds of each of the IILM Sukuk issuances are invested in the asset pool, made up of private placement Sukuk to fund some projects in some countries across the world. Ladies and gentlemen, such a Sharia-compliant funding program with credit enhancement by multilateral institutions could be one alternative to help play a key role in attracting international investors and help the government in achieving the SDGs in a bid to support strategic alignment of donors programs to targeted SDGs. Besides, stronger collaboration between multilateral organizations such as the IILM, the Islamic Development Bank, as well as the African Development Bank will help attract international investors. Additionally, recent initiative has been undertaken to help fund infrastructure projects in Africa. The UAE has pledged $4.5 billion to help speed up the development of clean energy projects in Africa under the COP28 presidency. Abu Dhabi's clean energy company, Masdar, the Abu Dhabi Fund for Development, Etihad Credit Insurance, and Dubai-based renewable energy company Amir Power will contribute to the funds. Africa 50, an investment platform established by African governments, and the African Development Bank has also joined the initiative. Besides, in September 2023, the Islamic Development Bank and Abu Dhabi Fund for Development announced a co-financing of the Mina Bida Road project in Niger State. Out of $163 million earmarked for the project, the Islamic Development Bank will provide 86.64 million US dollars. So all these examples, show that it is possible to work together to provide funding to key relevant projects in Africa, including Nigeria. As we move forward, there is no doubt that the increasing integration of Islamic finance with sustainable development projects in a country such as Nigeria will help accelerate the desired goals in the 2030 agenda. I believe that the speakers and the facilitators at this webinar will provide valuable insights into the topic on how to structure Sukuk to align with the investment requirements of various sectors, including recognizing its risk and return in the Nigerian market. I do understand that the discussions will encompass exploring investment opportunities in sectors suitable for Sukuk financing, as well as effective strategies and best practices to attract more investors to Sukuk offerings in Nigeria. In addition to that, I have been duly informed that the speakers will emphasize on the critical importance of understanding Sharia compliance considerations in Sukuk structuring and investment. I'm confident that these discussions will help further enlighten the audience with comprehensive understanding and knowledge towards achieving sustained economic growth and unlocking the prospects of African markets within the Islamic finance landscape. I hope everyone will have a blessed and productive day, and that we are able to highlight Islam's interest in the economy and the development of knowledge to serve individuals, societies, and the entire world. Distinguished guests, I would like to reiterate the fact that sustainable development is more than a goal. Sustainable development is a development that meets the current needs of the people without compromising the ability of future generations to meet their own needs. Let's all look inwards to explore Islamic principles that will engender sustainable economic growth for the betterment of all. There are numerous structures of Sukuk that can be effectively utilized for various sectors of the economy. Only a few structures have been used globally. As such, there is still a lot of untapped treasure to be explored in Sukuk structuring. Practitioners and structuring experts should therefore identify the needs of the Nigerian economy and diversify their structuring plans to sustain economic growth in the country. With that, I wish everyone a meaningful, enlightening, and impactful event. Subhanakallahumma bihamdik, ashhadu an la ilaha illa anta, astaghfiruka wa atubu ilayk. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam. So thank you so much for joining this, and I know that Dr. Umar has made your work a little bit, I will not say complicate it, or make it just easier for you to actually make the audience thrilled in terms of what Sukuk holds for us. So yeah, you have the floor. Thank you so much.
Jazakumullah khair, Brother Mudathir. Assalamu alaikum wa rahmatullahi wa barakatuh. First of all, let me start with a big thank you to the Metropolitan Law Firm and Metropolitan Skills for putting this together and for inviting me to share the little knowledge that I have on this topic with all of you here today. I owe a big gratitude to Dr. Umar for setting up the scene for us, for providing a good basis for us to start this conversation, particularly challenging us to make what we're discussing today practical and useful in our local context. I know we have very learned people here who might not even be panelists. Amongst the panelists, I'm sure we have very qualified people to deal with this. I know within the audience, even if it's not within Islamic finance, but in our various fields, we can take the learnings from this session and do the best we can with it. At the end of the day, what we want is that contributions to Islamic finance, to economic development, to Nigeria, and to ourselves weighs heavily on our scales. So we pray that this is a deal that started with a good intention, and we pray that Allah puts barakah in what we're about to discuss. Now, so I had an approach to this, which was to prepare a slide that had sufficient information that if somebody wanted to read it later on, it would be self-explanatory. I also had the challenge of making sure the slide was not too busy, so I tried to manage myself in between. But I would encourage us to please listen more than we read the slides. I will be using the slides as a visual aid, but please listen to how I try and present it. I'll ask if anybody can help me to indicate once my slides have started sharing. Brother Mudathir, you can do that for the participants, and just please let me know if you can see it. And
absolutely, your slide is visible. Your slide is
okay.
visible. Please go ahead.
Alhamdulillah. Yesterday night, one of my mentors sent me a video of Professor Hadiza. We might know her. She's very popular. She's an obstetrician, and she's very recognized. And in that video, she was speaking about how she's been able to change the level of maternal mortality in Nigeria by simple solutions. She gave an example of a case where her cousin was in labor and was losing a lot of blood. And they tried frantically to save her life during that period. Alhamdulillah, after giving her about 6 pints of blood, which apparently is the total amount of blood in a female's body, she was able to make it. And in that talk, she mentioned how her cousin was fortunate because she was an obstetrician and she was able to treat her, but many people don't have that level of care. And many people don't have that level of care because we have a lot of healthcare institutions that are not properly equipped. Healthcare service providers that are not thoroughly trained. And so Nigeria today has one of the highest levels of maternal mortality. And part of the solutions that she brought, not to say this is the only solution that we need, was a very simple change of mindset, a very simple ability to apply available tools within the environment to save the lives of many women in the hospital. And that resonated with me today, because we're not just talking about Sukuk as an academic or theoretical instrument, but it is important that we look at Sukuk from how we can use Sukuk practically to resolve domestic challenges, right? So to do that, I want to, say it in plain English, what the reality of our domestic environment looks like. And then we can now look at the non-interest market and then the opportunities of Sukuk, and then we can have something to take away. Okay? So, a lot of the statistics make us feel good. We say that the non-interest finance industry or Islamic finance industry, according to Fitch, about 2.9 billion naira, it is the our Sukuk markets, one of the largest in Africa. These are encouraging statistics. The Securities and Exchange Commission has charged itself to try and drive the non-interest capital market to as much as 5 trillion. Another couple of years, have more Sharia compliant products. We have a number. There's still some way to go. Now, globally, where we still have a journey, we're nowhere near Malaysia, so there's scope for growth within Nigeria, definitely. We're happy with where we've come, and we're quite optimistic about where we go. We're still 13th place if we look at the Islamic Finance Development Index, and the bulk of our market is between banking assets and Sukuk assets. But for all these to be useful and for non-interest finance to be relevant, it has to apply to our local economy, right? Now, we have various indicators that we use to understand where Nigeria is at today. If we look at the economy, we say we're growing gradually, about 2.51 as the last quarter, much less than where we were before. But if you're a business operating in this country, nobody needs to tell you a statistic, right? You know the challenges that businesses face. Businesses are facing challenges of access to raw materials because of the high costs of importation, because of FX, because of the unavailability of certain local raw materials, mechanized goods, things like this. You know those challenges, right? If you're like me, and once in a while you need to move around town, you know the challenges of transportation. You know how bad the public transportation system can be, and this is even for people that live in the city areas. I mean, I can only imagine how much worse it is for people that live further out of the city in satellite. Part of what we can attribute this to is oil prices. Please let me know if you lost my screen so I can put it back up. Is oil prices, and oil prices is a double-edged word for us, because when it goes up, our petrol prices go up, energy becomes a difficult thing to manage, and it presses us severely. Then we can look at our reserves. So people drop numbers to say, oh yes, we can cover a certain level of importation with our level of reserves, but how does that translate to you and I, right? What we see with this level of reserves is we still have a weak currency. We have a weak currency. We have dollars shooting up, touching 1,000 naira now. And part of the things that have been attributed to that is the lack of foreign capital inflow, the reduction in remittances into the country. So how do we resolve that? Dr. Umar mentioned unemployment. A couple of months back, we had our statistics agency changing their methodology on unemployment to say that the level of unemployment in Nigeria is now 4%. That means that in that analysis, out of 100 people, only 4 people are employed. Now, if we look at the old methodology, that's is 3 out of 10, like Dr. Umar said. Now, regardless of this methodology, we know people individually. I'm sure everybody in this room has a case of somebody that they know out of a job, looking for a job, transiting a job, things like this. And if we look to the reasons for why unemployment is such a problem locally, I can fathom a few, right? We know the issues of climate change around parts of the north and how that has affected productivity in that area. Displaced people created insecurity for the displaced people, affected production, and the case goes on. So unemployment is a problem. So if this is the environment that we as Nigerians are operating in, and we're talking about sustainable development, what kind of financial solutions should we be talking about if it cannot address the economy, energy efficiency, bringing foreign capital, improve the level of employment, and raise our standard of living, right? So it has to be practical. In our opinion, and I'm sure in the opinion of many of the facilitators and those that strongly promote non-interest finance, we believe that Sukuk offers that. Believe that the non-interest finance instruments and community offers that. Right. I wanted to touch on a bit of the SDGs to show areas within the SDGs that are critical focus areas for Nigeria. Now, in doing this, I took a look at the voluntary national review of the implementation plan for SDGs for Nigeria against 2030. I pulled out a number, right? Now, for the focus on healthcare, on education systems, agriculture was highlighted. If we look at SDG 3, focus on healthcare again, in fact, primary healthcare access and affordability was highlighted. When we look at equality, gender, and things like that, we saw agriculture again, we saw infrastructure, sanitation, potable water, right? If we look at economic growth in total emphasis. I get the sense that my internet is a bit shaky, so please can anybody just notify me if I'm audible?
Yeah, I think you will want to go back to the previous slide to repeat the last statement you made on that example of the SDG you were giving.
Okay, thank you. Please, if it does happen again, bear with me. I'll try and make sure it doesn't. Okay,
perfect. Go ahead.
So I was emphasizing that on the SDGs, the last point was on economic growth. And the fact that if we look at SDG 8, part of the critical focus areas for Nigeria that was mentioned in this national review was ensuring that the informal sector is empowered. And the reason for that is because we have within the informal sector a lot of older people who find employment there. In the formal sector, you don't find a lot of provision for the elderly, but in the informal sector, you have that. So if you want equality to improve, if you want to transfer care for older people, empowering the informal sector is one of the things that we should also look at, right? Now, it's also easy for us to believe that all levels of engagement in bringing up...
Go ahead.
Right. Okay, so I think I dropped off where I was trying to emphasize not leveraging only on the federal government or federal government issuances or federal government solutions by pointing us to what experts have also identified. And that takes me to the last line that you will see on this slide, which says that according to the review of this report, if we were to meet a number of targets, right? Hundreds of targets that have been set for the 17 SDGs. It will not happen without the involvement of local and regional governments, right? In our case, local state governments, because development goes down to that level, to the grassroots. It involves both individuals and corporates. Now, as a practitioner, I mean, we've been doing this for a number of years. It's important that once in a while, we pause, we look back, and we assess how far we've come as an industry or as companies, and say to ourselves, how have we really helped our economy? How have we really helped our market, right? We can believe that we have, in our minds, but it's important that we try and assess that. And part of the ways that we can do that is by looking at our stakeholders. So in Nigeria, we have individuals. How have we helped them? How have we helped corporates? How have we helped state governments? How have we helped the national government? How have we helped agencies and institutions? And can our solutions be useful across all these stakeholders? And if it can, inshallah, it will be meaningful. Right? And in doing this, I look at all the players and all the major stakeholders that we have in our market, and I can say with a lot of gratitude to God that many people are involved in the Sukuk market and the non-interest market, that you would be surprised if this is one of the first times you're hearing about this. Let me tell you, most of the agencies of government that you know about, most of the corporates that you have heard about are familiar, or in one way, people in their industry are involved in this market. So take, for instance, and take on the top of my regulators, right? A number of the regulators, whether it's the Central Bank, National Pension Commission, the Nigerian Exchange, the IFING Securities Exchange, the SEC, NICOM, FIRS, the level of regulation, regulation has been established. We've seen strong supervision from a number of regulators. For the commodities exchanges, we're seeing strong consultation. For a number of them, we've started seeing regulation being developed for this market in recognition of the value that it holds. For operators, we've gone through a lot of processes, and now what we keep hearing are market launches. Last week, we had a conventional operator issuing a Mudaraba investment plan, right? And with, alhamdulillah, one of our great facilitators here, the Sharia advisor, right? And that is to say, why would a conventional financial institution determine that it is in its best interest to tap non-interest capital if it did not believe that there was capital to be tapped in the first place? right? So we've had validation, very strong validation for this market. Now, we can call our products many things. We can call them Sukuk, but they are built on non-interest finance contracts, be them Mudaraba, be them Ijara, be them anything. They are built on non-interest finance contracts, and they are disseminated using different financial instruments. If it's a bond, like it's a Sukuk. If it's a mutual fund, like it's an Islamic mutual fund. If it's a share, it's an equity. Things like that. But they're all built on the basic concepts, and these have been proven to mobilize capital, reallocate capital efficiently, right? For consumers, we know we have a lot of work to do, but still, we have people that are very sophisticated in this market now. Maybe they're HNIs and financial institutions, right? But even within the mass retail, small corporates and the middle class, we're getting more engagement in this market. So in our belief, everybody is beginning to appreciate value, right, that non-interest finance has, and in particular, Sukuk has. So what do we have to keep doing? We have to ensure that whatever we speak about today is relevant. It achieves inclusion. It achieves participation. And when I say participation, it means that people who are included but don't participate fully in the financial market increase their participation in the financial market because there are more solutions that they can utilize. Dr. Umar mentioned about having different types of Sukuk that can show the full potential of non-interest finance. This will improve participation, right? Halal might get you included, but product development will get you more participation enhancement. We need to improve intermediation. Now, what does that mean? That means that we need to create more linkages between our market and the conventional market. We need to create more linkages between Nigeria and foreign markets. As institutions, we need to ensure that we're increasing intermediation. We need to improve allocation. Now, what do I mean by that? If we have resources that are concentrated and this industry or these instruments continue to concentrate wealth and not reallocate wealth, people will begin to wonder whether we are really being inclusive, right? So we need to improve allocation. We need to hold people accountable. We need to be sure that we're having the desired impact that the industry has, or the industry prophesies or says is going to have, right? So it has to be monitoring. So in the conventional space, what we see is that financing is just financing, but for non-interest finance, financing is not just financing. Financing has to be validated, right? And by that validation, we get value, right? So we need to ensure that we are monitoring what we are doing. We're not just handing money over, okay? Right. With this, we hope, right, that we can achieve things that have been identified as significant for our growth. We have major drivers that we think can enhance that growth: production, import substitution, to make sure that we're building local industries, agriculture, manufacturing, fertilizer production, smallholder farmers. These things need to be developed. We need to be sure that there is transparency and inclusion in all our transactions. We need to ensure that we're creating more engagement with our industry and young people feel like they can express themselves more within the financial sector. Right? We need to also make sure that we're creating empowering technologies, or we're financing empowering technologies, so people can begin to see that value that we've been speaking about. Okay, right. So this is where the capital market is, the money and capital markets for non-interest finance, where Sukuk sits. Okay, we have a number of financial instruments that have been adapted for non-interest compliance, right? In the equity space, for instance, the creation of a Islamic index, an ETF. An ETF is just an Islamic a fund that tracks an index, right? The creation of that, what that has done, regardless of the performance of both the index or the ETF, it has sent a strong signal that there is now a focus on socially responsible activities. There is now a focus on the avoidance of riba. There's a focus on speculation or the avoidance of it. There's also a focus on good working capital management among corporates, which is what an Islamic investor notices, right? So today I can have a pension fund that would be concerned about why certain company is considered compliant and not compliant, and by that concern, they allocate funding, to that corporate. If that corporate was to have a rights issue, that pension fund will be obliged to participate in it. Why is it doing that? that? It's doing that because there is a signal that these companies are operating or are recognized to be operating in a way that complies with Islamic jurisprudence. So we have that in the non-interest capital market. We have fixed-term investments. Now, for this, we've seen non-interest banks increasing in number. We have about 5 of them now. A number of them are growing rapidly, and which is why you would see conventional financial institutions trying to create non-interest products, because they've realized that if there wasn't a market there, why would you have 5 banks? Why would you have 2 new banks growing rapidly in the span of 2-3 years if there wasn't a market for it? So there's a shift in issuers' behavior, which shows that a conventional firm can also tap into this market. For Sukuk, we have demonstrated that Sukuk is flexible. Right, we have demonstrated that Sukuk can be applied to infrastructure development. I don't have to, I mean, on my subsequent slides, we'll get a bit more into Sukuk, but I need to give us an overview as to what is available now in the market. We often don't talk a lot about commodities, so permit me to do that here. Now, there has been substantial investment in our commodities value chain, both within private markets as well as within the commodities exchanges. And why? Because the commodities environment offers opportunities for return enhancement. It offers opportunities for liquidity, right? And these commodity exchanges have recognized that. And we do have a share compliant asset-backed commercial paper in Nigeria issued about a year ago by the African Exchange, right? So these developments are there. Are they small scale? Yes. Can they be enhanced? Definitely. Can we do it? Of course we can, right? And then we have asset-backed investments. So our asset-backed investments typically show how for individual corporates, non-interest finance institutions are able to structure simple transactions that are flexible in nature, can meet the payoff or payout pattern of a corporate and still deliver returns for investors using either equity sharing contracts or sale-based contracts. So these things are available. They are available. They have been developed. They are being used now. So if you're a corporate that is not aware that these things are available in our market, then know that they are, and engage. If you're an investor that doesn't know that these things are available in our market, know that they are, and please engage. So if you are an issuer, a potential issuer, a subnational leader, a leader of a municipality, understand that capital is aggregating fast within certain segments of the financial markets. Your understanding of it will be beneficial. Your participation will be even more beneficial. To give us an example, I'll take the pension industry. Right? I'll take the pension industry because the pension industry is by far the largest investor group or investor segment in our local market. Now, has that investor group not taking notice of non-interest finance? Actually, they have, right? You're looking at about 15.5 trillion in capital that has been accumulated. And now we have a category of that known as Fund 6 that is dedicated to non-interest instruments. Now, as practitioners, one thing we need to know is understand how the pension funds think. How do they allocate money generally? And we find that being very low risk. If we look at the table on my right, forgive me, it's a bit busy, but look at the second line of numbers, the second row of numbers, the last column, and you would see that about 65% of that, as at February, was allocated to federal government securities. Right? What that means is that within non-interest finance, as you accumulate this funding, the instruments that would necessarily go to from this investor grouping will be federal government linked instruments. There would be some that will go to corporate linked instruments. There would be some that will go into other asset classes, but we would still see a reasonable participation of federal government securities because of the way capital is allocated by one of the largest investor groupings. Okay, this is not to say that we do not have additional investor groupings within the asset management industry. For instance, we have, I think, close to 60 billion naira that has been accumulated over a number of mutual funds publicly. That number can potentially double if we look at the private side of that market. If I look at the FMDQ's private market, I mean, we're looking at hundreds of billions in that market. I think my last count was about 400 billion in that market, not specifically for non-interest, but non-interest is also included in that number. right? Now, to give us a taste of certain transactions that have happened and how Sukuk in particular has been applied, right? We're talking about an instrument that is considered to be, I mean, in Nigeria to be the largest within the African context. So Sukuk, according to statistics, what we have at 755 billion naira is about the largest within Africa, right? Roughly about 1.6 billion. If you don't use today's exchange rate, so please don't use today's exchange rate, right? Now, we've seen the application of Sukuk in real estate. We've seen the application of Sukuk in energy and commodities. We've seen the application of Sukuk in financial institutions. And of course, we've seen it in infrastructure. We might be familiar with the road constructions of the federal government using Sukuk, but are we familiar that other governments have also used Sukuk for road construction, and other than road construction, the Lagos State, for instance, has used it for road construction. For those of us in Lagos, we have traveled or would have traveled across some of those roads. And also within Katsina State, Gombe State, things like this. So we're getting pockets, of Sukuk utilization across industries and across segments, right? We're also getting Sukuk that are partnership-based and not just lease-based. We're getting short-tenor Sukuk, which in effect is a commercial paper, right? We're also getting Sukuk that has been used for renewable energy and is rated as green Sukuk, like the 1x1 with solar. The expertise to develop these type of Sukuks exist in our market. So I'm not speaking about foreign people coming to our market to structure financial instruments and then only foreign capital comes. No, I'm talking about local participation, local players developing green Sukuk, developing perpetual Sukuk, developing non-interest compliant commercial papers, developing non-interest real estate investment trusts. Okay, so I hope I'm able to demonstrate, at least with this, you can check them after the presentation and give yourself the level of comfort about what the industry has and can do. Okay, now, why is this real? I'll take one example to demonstrate that. I'll take AFEX. AFEX has had two non-interest insurances listed on their exchange. One of them was a non-interest commercial paper. Now, what it did there was that it realized that within the agricultural value chain, something was going on. A lot of agro processors were unable to acquire commodities throughout the season for production. They also, obviously because of storage capacity and things like that, and not having the necessary amount of liquidity on day one to buy things up during the harvest season. If they waited till other seasons, the price went up. And so they keyed into an opportunity. They issued a non-interest commercial paper using a combination of Wakala and Murabaha. And what did they do? They were able to aggregate commodities, sell them to agro processors in such a manner using forward contracts to ensure that they had a steady supply of agro commodities. And I'm talking about people producing animal feed, people producing food products. What does that do in effect? That increases food sustainability, and that also helps us to bring down prices. Now, this type of innovation was possible because we were flexible enough to understand that the Murabaha or Wakala could be applied in that instance. Okay. There were also instances where this entity understood that there were also farmers that needed capital. And they couldn't get that capital because obviously there was nothing that they could securitize. In addition, they needed capital ahead of the planting season, right? How difficult is that going to be, right? So using Islamic finance principles, they were also able to buy commodities for delayed delivery from the farmers, aggregate farmers, train them, provide them seeds and fertilizers, have the customers or the farmers repay with commodities and sell those commodities off and get capital. And what did they do by doing that? They empowered local farmers. We had already mentioned that part of the areas where we need to focus on in ensuring SDG 1, right, is empowering smallholder farmers. So these kind of solutions, we need more of these kind of solutions, right? And we believe that we can do it. So I've spoken to a number of issuers, and they've tried to explain to me what they believe has been some of the benefits that they have seen with issuing Sukuk, right? One of them, I think, at the top of that is the transparency that they have in the application of funding. And if we didn't know, I mean, we can attest to it. We drive on roads that have been built with Sukuk. We see the transparency in the funding. If I asked you the last FGN Euro bond that was paid about 2 months ago, what did the federal government use that Euro bond for? I mean, I'm not saying that they didn't use it responsibly, but I'm saying how many people can articulate what it was used for. If we say it's Sukuk only used for roads, at least you know what it was used for, right? And you know which road, you know when. Okay, so the transparency of the application of funding has been a very strong element of Sukuk finance. One thing that's not mentioned a lot, but it exists, is a bargaining power. And why is that? For an issuer, what you find is the more your ability to speak to different investor groupings, the easier it is for you to negotiate for financing terms and conditions that are beneficial to you. The more you're stuck with one financing source, the more difficult it is for you to negotiate, right? So bargaining power also improves for issuers when they use alternative sources like Sukuk. Then there's diversification, the ability for you to have the different funding sources such that if one taps out, you can pull out another one. Nowadays, we have a number of issuers that are coming to the market with hybrid programs. Now, a hybrid program says, I'm coming to the market, I want to issue a green instrument. I want to issue a Sukuk instrument. I want to issue a conventional bond. I want to be able to do all these things because I understand that green is important. I understand that I still need some kind of access for whatever reason best known to them to the conventional market. But I want, in addition to that, to have access to the non-interest market. So for instance, Lagos State did that. In their last issuance, they came out with a hybrid program that allowed them to have Sukuk and green instruments alongside their conventional program. So diversification is another thing that we've seen. We've seen business showcases. What happens when you issue Sukuk? The additional publicity that you get is phenomenal because this market is encouraged by issuers that determine to make themselves more transparent, to make themselves appeal to certain segments of market. And on the back of that, your social capital increases. Now, we've also seen that it expands your network of professionals, right? Because you have dedicated professionals like ourselves and everybody else on this panel and in this room that focus on non-interest activity. By the time you commit yourself to issuing a Sukuk, you're exposed to that talent pool. There are lawyers, Metropolitan Law, and others, right, dedicated to that type of financing. So your decision can expose you to a larger talent pool. So what are the opportunities and how do we advise people in issuing Sukuk? I want to make sure that I speak to all of the points that Dr. Umar tasked us with, at least introduce it, and hopefully we can elaborate it when the other speakers come. I hope you can give me a time check, Brother Mudathir. Right?
Yeah, absolutely. So, absolutely. Go ahead.
Okay, thank you very much. Right. So in advising issuers, certain things that we try and make sure we capture before putting together a Sukuk. It's good to know how frequently does this issuer intend to come to the market? Do they have regular borrowing needs? Is it a working capital matter, right? Or is it a big capital project, right? So you need to determine all these things up front. Is it a fixed financing, or is there a possibility that you will come when you want to keep scaling up? So if you come and the offer is really good, would you want to scale up, right? Why do we need to do that? Because Sukuk is project tied. So if, or most type of Sukuk are project tied, I mean, there are other Sukuk that, may not be specifically project tied in that instance, but it's important to know which one it is so that we know how to structure it. Another thing that we try and look at is how familiar is the investment community with that issuer? How familiar is the investment community with any Sukuk that we want to push out, The reason is because there are different avenues where you can tap into funds. You can tap into funds from a public market. You can tap into funds from a local or a foreign market. You can also tap into funds from a private market. Many people don't talk about the private market, but it does exist. And it is also substantial, right? It is for sophisticated, mostly institutional and high net worth individuals that can participate in this market. So if you feel, for whatever reason, that your project, right, all the complexity of the kind of finance that you want to go might not be sufficient for a retail investor, you can apply yourself to a private market and access capital there as well. And they are Sukuk that have been successfully issued within the private frame, right? We need to know the nature of the underlying asset, right? And why this is important to us and also to us as sustainable investors is because the nature of the asset has to comply with Sharia. It cannot be something harmful to society. It has to be something, something productive, something reasonable, right? So we need to know the nature of the underlying asset. You need to be a bit transparent, right? We need to know how much funding you want to raise. Now, the reason why we need to know how much funding you want to raise is because we need to be able to ascertain what is available within each investment pool. I told you the pension community has about 15 trillion naira. If you came to me and said you wanted to raise 1 trillion naira and you want to raise it in 2 days, automatically I know the fastest way to do that is to tap into a particular investment community. And then we structure along that line, right? We need to know the operating structure of the issuer. And why do I say this? Because part of the things that we should charge ourselves with is monitoring. Okay, so if your operating structure doesn't create an environment where we can run Sukuk in a decent manner and projects get done and money gets returned, your structure is weak, then that will not be a good application of the funding that people have entrusted us with, right? I highlighted the area of tradability, and the reason is because most Sukuk are tradable. Not all instruments have to be tradable, right? And I'll give you an instance. If I am, and we've been on a transaction that was for 270 days, mainly institutional and high net worth individuals investing in that Sukuk, they didn't require tradability. Because they didn't require tradability at the time, it opened up different type of Sukuk structure that we could do for that issuer. So tradability is another thing that we look at. Then we look at things of assetability of Sharia structures. Now, for those of you who are non-interest finance students like myself, this is a very interesting topic, right? Because we know that people have opinions. There are standards and there are scholars with opinions. As Lotus, we always try to make sure that we come up with structures that most scholars, most jurisdictions are comfortable with, and so the transaction goes seamless. This is not to say that they are not structures that other scholars prefer, allow, that are not possible within our market. And indeed, we have seen this, right? We need to make sure that the regulatory framework is robust enough to help the issuer understand the implications of issuing Sukuk. We worked with an issuer, a potential issuer, about a year or two ago. Now, it's a big conglomerate. Part of the things that they were concerned about was how would their EBITDA margin be reported with the issue of Sukuk. See, people have finicky issues. So they like the idea of the Sukuk. They like what it can do for the entity. However, because they want to show investors their financial statements, they want to know how will Sukuk be reported in our financial statements. And we had to work them through the computation of their EBITDA using a Sukuk instrument when they issue, till they became comfortable. We had corporates who wanted to know what would be the tax treatment of Sukuk. Thankfully, the FIRS has released regulations that has cleared the air to show that the taxation of Sukuk is very similar to or equated to a conventional bond, right? So the Sukuk market is robust. Your advisors are experienced, right? They are experienced. They have operated for many years, and they have case studies that we can leverage on now in this market. The important thing is to make sure that whatever we're issuing in our market is relevant and it achieves the purpose of development, because after a while, people will wonder if you're not just fattening your pockets. Okay? I've dropped some things about the flexibility of Sukuk and what Sukuk can be used for, and I'm going to probably bring this to a close looking at how simple Sukuk is. Now, I felt that some people were waiting for me to put up a diagram, and so I put up a diagram, but I don't think a diagram is necessary. Okay, so for those who like diagrams, here you have some lines and boxes moving around the place. But what I want you to focus on is the middle box. The middle box is the issuer. Now, for a Sukuk, what does the issuer do? Right? The issuer pretty much does a financial transaction that issuer is probably already familiar with and is similar to his regular operations. It's either selling, partnering, or leasing an asset that is known, right? And the payments that come to investors are a function of the operability or the revenue generated or linked to that asset. Okay, this simple feature changes a Sukuk from a conventional bond and allows people who consider this difference to be significant to participate in the financial market. So you get that inclusion, you get that participation, you get that allocation, you get that monitoring, you get all those benefits that we mentioned that are important for sustainable development. Again, for people that want to read about just how different Sukuk can be from a conventional bond, we'll put up some features for you here, and I've highlighted some clarity around taxation that can show you that the FIRS has equated it. So I'm going to leave us with these parting thoughts, and then perhaps in our conversations, we can look at other opportunities and some concerns that people may have. I've mentioned some people were thinking about how it will affect their reporting and things like that. I've also mentioned about the differences in compliance and how we resolve that. I've also mentioned about the investment opportunities and how it should be linked. So let's look at what we should leave here with. If you're a potential issuer, would you want to tap into a growing funding market? I'll leave you to answer that. If you are an investor, while aiming to earn returns, would you also want to do something that is considered to be good? And then if you're a steward, if you're a government official, if you're a regulator, if you're the head of an institution, would you be interested in making sure that you leave a legacy of delivering results? If you answered positive to any of these questions, then Sukuk is for you. Thank you.
Wow. Alhamdulillah, this is electrifying and a wonderful presentation. I mean, you definitely you never disappoint. And thank you so much, Mr. Ndako Mijindadi, for this wonderful presentation. And I believe that everyone have been able to grab one or two things. You've been able to put yourself where you think you fit. And I love your what you use in closing, which is the questionnaire you put in that closing. Let's ask ourselves, if we do fit into all this, then Sukuk is for us. Otherwise, let's seek more counsel. Thank you so much. There will be discussion on this, and the wonderful person, my own personal person, that will be discussing your presentation, and also, in addition, the keynote speaker's presentation is none other than the MD, CEO of 117 Capital Limited. Is a person that is, well known to everybody in the Sukuk market, in the capital market. Don't let me restrict it to Sukuk now. Into the capital market. He has partaken in the issuance of so many Sukuks, either private, either state, or federal government in particular. Help me welcome Malam Attahiru Maccido, or should I say Mr. Attahiru Maccido or Alhaji Attahiru Maccido? Anyone, you can call him anyone. He will answer. Thank you so much. And kindly take us through these two presentations and discuss about them and what you feel, their deliverables are and how we can actually imply this in our economy as of today. Thank you so much.
أعوذ بالله السميع العليم من الشيطان الرجيم بسم الله الرحمن الرحيم صلى الله على نبينا محمد وعلى آله وأصحابه وذرياته وسلم تسليما كثيرا أما بعد. السلام عليكم ورحمة الله تعالى وبركاته. Thank you so much, Brother Mudathir, for that introduction, and Brother Dr. Umar. We are always proud of you, of course, based on what good work you've been doing and portraying Nigeria in a very good image when it comes to our activities, and particularly Islamic finance globally. Ndako Mijindadi, thank you so much for that presentation, which you've covered a lot of issues in relation to what we are expecting as far as the Sukuk is concerned. And you didn't even stop at only Sukuk, rather you even linked it up with all the relevant benefits and activities needed with respect to the SDGs and other things needed to be known by us here who participated in your presentation. Thank you so much for that. Let me extend appreciation as always to the Metropolitan Skills as well as the law firm who actually put up this particular pre-conference webinar so that to enlighten people what they should expect during the conference that is coming in November. Of course, it is a conference they are doing every other year, and I believe this is the 6th one they are doing, which they've started since 2008. Thank you so much. We need more of a metropolitan law firm as well as metropolitan skills activities in portraying Islamic banking and finance, as well as bringing the benefits that our people can understand as simple as ABC in order to adopt it for our socio-economic activities. Now, based on the papers presented by Brother Umar, of course, issues to do with SDGs have been portrayed clearly, which we know at least the Sukuk that we have and Islamic finance is directly linked to all the activities or the results needed from the SDGs, ranging from the eradication of poverty and growth, socio-economic growth, and all other things related to that. Ndako Mijindadi coincidentally also brought it in his own papers, because as long as we're talking about Sukuk, you must link it up with some benefits that the economy, these people are going to benefit or enjoy for it to be reasonable in line with that aspect. And as a result of that, we have actually a presentation by Ndako Mijindadi that has expressed the opportunities that we are seeing in Sukuk for sustainable development. Yes, with respect to all the stakeholders, he brought the stakeholders, especially the regulations that are already there, ranging from if you want to do anything in the country, you must make sure that you have your foundation very strong. And the foundation here is actually the regulations. Without the regulations, Islamic finance will not actually come to play in Nigeria and in any other jurisdiction. We've witnessed it before when the BOFIA actually allowed, even though it allowed the profit and loss banking license to be provided, which Habib Bank then actually applied for the license, but because of lack of regulations, the guidelines that how such kind of industry is going to play around, unfortunately, it has a short life. So regulations are very critical. And as a result of that, that is why Ndako Mijindadi, showed actually the organizations, the regulatory authorities that have already came up with their respective regulation. The Central Bank of Nigeria, who came actually to provide all the necessary guidance with respect to the money market activities, the Securities and Exchange Commission, who came with the SEC rules and regulations with respect to the Islamic funds in 2010, as well as Sukuk rules and regulation in 2013. It plays a very fundamental issues that made all our Sukuk issuances so far to be smooth in respect to what we are doing. Likewise, we equally have the NICOM, who came actually to provide their own regulations with respect to the Takaful, which is the Islamic insurance companies, that so far we have about 4 that have license with the National Insurance Commission. And of course, we are having others, or we have others such as the Federal Inland Revenue Service that provided the waiver or the level playing ground for all the parties to play, including when it comes to Islamic finance, because we know, or at least we should know, that there are some contracts in Islamic finance that, of course, you have to acquire an asset legally, and beneficial ownership must be on you before you turn back and play on that asset and sell it or unlease it. And as a result of that, technically, there will be 2 transactions in this kind of contract. And as a result of that, if we are to play along the normal taxation issues, there will be double taxations. And as a result of that, the Federal Inland Revenue Service realized that it's not supposed to be a double taxation charges. Therefore, they've decided to provide only one-way tax to be charged on this kind of instrument. So Federal Inland Revenue Service also came up with that kind of regulations. And then we have all others such as the NDIC and others that came up with their own. Of course, the self-regulatory organizations such as the exchanges, commodity exchange and others are not left behind, because FMDQ and the NGX, they equally came with their regulations. So regulations is basic for all of us to have what we are having at the moment. And it is these regulations that we have that actually shows how accelerated the industry is. Just barely a decade ago, we've started this particular industry by, at least in money market terms, we started by giving the Jaiz Bank, for instance, license. But at least where are we at the moment? The acceleration growth that we witness actually is very impressive when it compared to even other jurisdictions that have been within this particular lifespan of the industry. Nigerians, so far, we are able to have at least 4 standalone Islamic banks, 2 windows. We have microfinance banks. We have federal government issued Sukuk about 5 times. They are just about to issue the 6th one. The Osun State came and issued Sukuk since 2013. The Lagos State issued Sukuk. Then the private issuances of Sukuk. Taj Bank, as a money market, also issued Sukuk. And all these ones are as a result of the regulations. So far, we equally have the fund management companies that have issued at least their mutual funds, about 11 mutual funds that we have, that, and as well as the real estate investment trust scheme by Chapel Hill that came as a Sharia compliant, which put them together. We have about 100 billion in asset under management by these mutual funds, which is actually a positive. Now, after all these regulations, what we can look at is the sectors. As far as we are talking about the sustainable development or Sukuk to be issued, all sectors can be considered as Sharia compliant as long as they meet up with the Sharia compliant, unless specifically they fall under the sectors that are prohibited in the Quran or in the Sunnah. And meaning, if I say all sectors, it means all infrastructural needs in the country can be put into it, be them roads and bridges, as we've already seen from the federal government of Nigerian roads Sukuk that they've issued, be them housing scheme, as we've seen in the family home Sukuk that have been issued, and other private real estate developers that issued private Sukuk. Likewise, if there is need for an airport to be constructed, a Sukuk can be used. If there is need for hospitals to be constructed, a Sukuk can be used. If there is need for, of course, oil and gas transactions to be also done, the Sukuk can be issued by the issuers. Now, we should also remember Osun State, when they came in 2013, they were able to do Sukuk in order to finance the schools in most of the local governments in the state, meaning all the necessary needs in terms of the infrastructures can be taken care of by the Sukuk and the sector-wise. Then Ndako also mentioned some of the contracts, which also Dr. Umar mentioned to us that we need to do some things there in order to align our participants to understand. Yes, there are a lot of contracts that can be used. So far, according to Accounting and Auditing Organization of Islamic Financial Institutions called IOFI, which is based in Bahrain, they have issued several Sharia standards in line with the with Islamic finance generally. And of course, one of their standards is to do with the Sukuk, which is investment certificates. And in that, they specifically mention that there are 14 possible Sukuk structures that can be used. But of course, out of these 14, very few globally have been used, meaning there are a lot of other opportunities that can be innovatively be used based on the contracts. And the contract that we have, for instance, Ijara, specifically according to that particular IOFI's standard, they mention about 5 different types of Sukuks that can be issued if you are to use Ijara. And that Ijara, meaning the asset that's supposed to be used as the Sukuk asset, can either be existing asset or non-existing asset. It can be a physical asset or it can be a services. All these ones, put them together, they came up with about 5 different Sukuk that can be issued through the Ijara. Not only Ijara, of course, we already have most of our Sukuk issued here in Nigeria, such as the federal government of Nigeria was used actually the Ijara Mawsufa fil Dhimma, which is the forward lease asset Sukuk, which is the forward lease contract that was used by the federal government of Nigeria as well as the Osun State. They used because the assets were not actually in existence, but it was the funds that they were able to raise that they've used in order to construct this particular asset to be leased out to the federal government of Nigeria or to the Osun State government, and then they, being the lessee, will be paying the lease rentals periodically until end of the transactions, when they will buy back the asset from the SPV, which from the structure that Ndako has mentioned, has provided, actually showed a box specifically at the middle that is the cornerstone of the entire transaction. We equally have some other contracts, even though not yet used, for instance, such as Musharaka, but Musharaka can equally be used where two parties can come together to provide capital, to contribute capital into a venture, and then they will pre-agreed on the profit sharing ratio. If there is any loss, they will bear it according to their capital contributions. This is a formidable structure that can be used in structuring any Sukuk, especially on the real estate, or at least the mass housing scheme, where the promoter or the sponsor, who may be the one who is promoting this particular Sukuk, may have an asset such as a land that he wants to provide as his own contribution, while the SPV, which is a company specially being created, incorporated specifically for this particular Sukuk issuance, can act as the issuer of the Sukuk instrument, where they will get the capital from the investors, and then they will deploy the capital into the venture as their own capital contribution. Both the contribution in kind by the promoter and the cash by the SPV can put together in order to provide assets that will be provided, and then they get actually the profit in line with their respective contribution to the capital. And of course, we equally have Mudaraba. Mudaraba Sukuk was used actually by Taj Bank, and where at least there will be a party to the transactions. Promoter will act as the player who is going to manage the venture, and then of course the SPV who is going to seek for investment from the investors will then get the funds and give it to the Mudathir, who is the promoter, who is going to manage and give them respective return. We equally have Wakala and some other contracts that we can equally use in there in the contracts of any Sukuk we can. And then of course, if we are to look at all these ones, who are the investors that are expected to invest in this particular instrument called Sukuk that the SPV can issue out there, so that it can get the capital that it will provide, either to construct the roads that are needed by the federal government of Nigeria, or to construct the houses that are needed by the family homes, or any other things in line with their contract. Now, the investors that we can see is all the retail individuals that wants to play in the retail market can equally invest, as long as it is earmarked and it is specified in the prospectus that it can be invested by retail investors. Yes, there may be some investment, such as the private Sukuk, that may need very few investors. So as such kind of contracts or as such kind of structure, they may not need the retail investor. But public issuance, usually they have a mark for the retail investors to invest. So you and I, in case we want to invest as retail investors in Sukuk, we can equally do that. Of course, the HNI, high net worth individual, are equally investors into the Sukuk, meaning they can invest into it. Then what about the corporate organization? First, the non-interest financial institutions that already lack the liquidity management instrument, or this kind of instrument, can equally invest into it. The likes of all the Islamic banks, all the Sharia compliant asset management companies, and of course now we are having the pension fund administrators in line with the Fund 6. They can equally invest into it. We equally have all the other conventional investors, bond investors, that are usually investing in bonds. They are equally investing in Sukuk. Why? Because they realize that what they are after is the security of their investment as well as the return they can get. Now, all the security of their investment as well as the return can equally be gotten from the Sukuk structure. And of course, plus, in addition to that, the asset belongs to the investors, meaning these conventional bond investors, if they participated into it, they will partake as part owners of the asset, unlike the conventional bond. So as a result of that, the value at risk in Sukuk is less compared to the value at risk in the conventional bond. So as a result of that, they all partake into investing. As we know, most of the Sukuk issued by the federal government of Nigeria and of course some other institutions that have been issued so far, we have about 60 to 70% of the Sukuk issue investors came from the conventional bond investors or conventional institutions that are investing in it. Now, I've been looking all about this one. What about the benefits that an investor can get or an issuer can get with respect to the Sukuk issuances? First, we should know that all the presentations actually made by Ndako mentioned about the socioeconomic growth and other things that we are expecting. Yes, even in his presentation, he mentioned the effects that came and raised funds from the non-interest capital market privately, and they are actually to see how they can aggregate some commodities right from the gate of the farmers, where meaning they've empowered the farmers by giving them funds to go and get these particular commodities that are needed. And immediately meaning by giving them, they are eradicating poverty, they are making their health to be good, they are making their well-being to be important, as well as they are contributing to the growth and development socially, as well as economic activities in relation to that. So the first benefit is the socio-economic growth that we can easily see in line with the Sukuk issuances. Then competitive return, like I mentioned to you, of course, conventional bond investors are partaking into the investment in Sukuk just because they realize that the return they are getting from the bond is equally the same return or even better the return they can get in Sukuk. And as a result of that, they key into investing in Sukuk in line with their issues, especially because of the low value at risk that are in line with that. Ndako Mijindadi clearly spelled out the transparency attached to Sukuk issuances. Of course, because of the transparency, you can have confidence that if I invest into the Sukuk, I see the transparency and the governance structures attached to the structure, and I'll feel comfortable to sleep with all my eyes closed, knowing that it is transparent, and when the return is going to be paid, it will come to me directly. Give you example of the federal government of Nigerian Sukuk, where even though the funds are to be given to the government as an agent through the Ministry of Works and Housing as an agent, but at least there are trustees that are already there looking at all the transactions and all the benefits, as well as the obligations and rights of the investors, you and I, that they are covering. And as a result of that, they will make sure that the funds given to the Ministry of Works and Housing as an agent of the SPV to make sure that the roads are constructed are actually deployed into the construction of the roads as it is specified. Likewise, they equally appointed project managers to go around to all the 6 geopolitical zones where the roads are to make sure that they are going there consistently and be making sure that the roads are being constructed in line with the quality that are needed on that particular road. So as well as when payment is going to be made, they are equally going to make sure that the payment are made to the investors, to the subscribers, in line with the time frame that are expected to pay. All these ones are there. Apart from that, the governance structures also shows that you are rest assured that whatever structure that is played out there in the public is Sharia compliant because of the governance structures in line with the review of the Sukuk structures as well as the documentation. First, the issuer must have at least advisory council of experts that will review all the relevant documents to make sure that the structure as well as the cash flow are going to be Sharia compliant before it's subjected to the Securities and Exchange Commission for their review. And immediately if SEC receive actually the application, they will send it to Financial Regulations Advisory Council of Experts, which is the Sharia advisors of the CBN, so that they can review and make sure that it's Sharia compliant. It is only when it is Sharia compliant that the CBN phrase will assign and said, yes, they've testified that this structure is Sharia compliant before it comes to the public. And therefore, you are actually know that transparency-wise, it has passed the level of Sharia compliance based on our local tenants, as well as the issues to do with the structuring and taking care of all the benefits, as well as all the necessary things, obligations, and rights of the subscribers by the trustee. Now, looking at all these things that I mentioned, so we can look at the Sukuk provide investment opportunities for sustainable development in Nigeria. As long as you are having, you are potential investors into the Sukuk, you'll be rest assured that your investment is actually going the way it's supposed to be going, in line with the specifications provided, especially if it is a public Sukuk. Yes, it is better to make sure that you invest in public Sukuk, especially because it has all these governance structures. With respect to the private Sukuk, yes, it has some deficiencies because it doesn't have to be cleared by the Securities and Exchange Commission, because it doesn't have to be cleared by the Financial Regulations Advisory Council of Experts of CBN. But of course, it equally have their own trustees attached to the transaction. They equally have their own advisory committee of expert aides that will structure the transactions, as well as endorse the structure as Sharia compliant and in line with that aspect. But of course, the major structure or the governance structures we can have is more of the one that can go to the public through the Securities and Exchange Commission. Now, with respect to all this, we can equally see the sustainability, we can equally see in investing in Sukuk. I think due to time factor, this is where I can stop with respect to my discussing on the two papers. And subhana rabbika rabbil izzati amma yasifun wa salam ala al-mursalin walhamdulillahi rabbil alamin. Thank you so much.
Wow, thank you so much, Mr. Attahiru Maccido. I mean, this has been a wonderful breakdown you've done, and also you've been able to discuss both the keynote speech and also Malan Ndako's presentation. Thank you so much for that. Before I open up the question and answer session, I think I need to actually emphasize on this. Most of us on this call today, in this meeting today, we know we are trying to get one or two things out of this presentation. Basically, how can you participate in the Sukuk market? It's very important. And you need to ask yourself that question. Either you are a regulator, either you are a player, either you are just an investor. I mean, there pose a lot of opportunities for all of us here today. Dr. Umar Oseni has mentioned the international field of Sukuk, the prospects that are there in Sukuk that Nigerians need to abide by. And also, Mr. Ndako mentioned a lot of how we can actually use Sukuk in different sectors. So today, try to search inwards on how you can actually benefit from this instrument. So I thank you very much to all our presenters today. Then now I'm going to open up the question and answer session. You can actually raise up your hand if you have any questions, or if you have questions in the Q&A tab. I will hand over to Mr. Olufumbi Akpata to control and coordinate the question and answer session. Mr. Olufumbi, kindly unmute yourself. And if you have any questions under the question and answer tab, kindly let's take it one after the other. And also we'll give room, because we still have a little bit time, we'll give room for whoever wants to ask question or even had comments before we close this session for today. So Mr. Akpata, please kindly unmute yourself.
Okay, we currently have the question in the chat box, so I think we can start with that. It says, please, what's the financial assets of NIB and portion attributable to Sukuk? That's non-interest bank, I believe. NIB.
Okay.
Asking what
Any
the
other
financial assets
questions
of
that we
NIB.
have?
We have someone's hand raised.
Okay, I think let's. I would rather call Mr. Ndako Mijindadi to answer that question. I believe the question is for him. Can you unmute yourself, sir? And
Yes, I
go ahead,
can.
now.
Please let me know if you can hear me.
Absolutely, you're audible.
Okay, great. So I'll answer the question in two ways. One, I'll speak to the total assets that we have, which is about $2.9 billion, according to research. We need to bear in mind that this figure includes Sukuk. So if we take out Sukuk and we look at just the banking, banking is about 50% of that. So that gives us about 1.45 billion USD. At the last count. Some of this is in companies that are limited. So for instance, the likes of Lotus Bank, Taj Bank, so they wouldn't be public companies. The largest of this, as I'm aware, is Jais Bank for now. How much of this is in Sukuk? I can't say, but if I was to function the gas, I would say roughly about 30 to 40%. I'm saying that because banks would also need to have assets that are allocated to direct financing, what we would call transaction financing. They would also have to keep some funds for liquidity. So I manage a fund. I'm looking at my regular asset allocation. So if I was to use my fund as a proxy, I would say somewhere between 30 to 35% is what I should say would be the Sukuk for the banking sector. Bear in mind that the banks are not the only investors in Sukuk. I mentioned, Attahiru also mentioned, the pension fund administration community is also a large Sukuk investor. At some instances, when Sukuks are issued, the issuer, especially for the federal government, the DMO, has to do an allocation to make sure that the Sukuk actually goes round because it's significant demand for the Sukuk. So what you will see as the holdings of either a bank or a pension fund administrator is not the same thing as their demand. The demand could have been higher, but the Sukuk was not enough that was available, and so their demand got cut. Right. So the figures that we're giving you for the holdings of a bank or any segment in Sukuk is not reflective of their full demand. It's reflective of the available Sukuk in the market. Okay.
All right. Thank you so much.
All right. Thank you. Mr. Ahmed Kabir, you could go ahead and unmute yourself and ask your question.
Okay, thank you very much for the opportunity. Two questions very quickly. One is on the issues of training opportunities for those who will want to further their skills in the aspect of Islamic project finance. We're talking about Sukuk, and I think it's one of the best instruments for I know most practitioners will want to learn more. Unfortunately, what we have in the country is more or less the generic knowledge of the Islamic banking and finance, with so much emphasis on even the banking. But I believe we have better opportunities in the project finance. So I wouldn't know whether Metropolitan Skills will answer or any of our presenters today. Then the issue that was raised about the regulation, I mean, the issue raised by Mala Attahiru Maccido on the regulation of the private Sukuk. I don't know that that is actually restricted to, or it is what is obtainable in even other jurisdictions, because I mean, we know how private players are. I was just thinking that the phrase should also have an oversight. I mean, if there are other regulations that the government or regulatory oversights that the government provide on private companies, particularly the public listed companies, maybe the phrase mandate should also extend to the oversight on privately issued Sukuk, because sometimes if you just as a way of possibly, enhancing the credibility of the process. I don't know if, as I said earlier, it's limited to our own jurisdictions, but or even in other jurisdictions, that is what is obtainable. I mean, the private guys does their things privately. If you have interest in investing, if you don't, you do not. Thank you very much.
Thank you so much, Mala Ahmed Kabir. I think the first question, I would actually throw that to Mala Attahiru Maccido, being that is in Nigeria, and he knows what actually cut across the capital market, not only the Sukuk now, but the capital market in general. So the trainings available for the Islamic finance in the capital market. So I think, do we have any? If we do, kindly avail them. If we don't, can we, suggest to have some of them, to kickstart?
Thank you so
Mr.
much,
Brighton.
brother. Thank you so much, brother Mudathir. Yes, with respect to the generic that we are having in Nigeria, of course, is because of Islamic banking that we've been saying. But when it comes to capital market, you know that it is a layer in terms of technicality above the main Islamic banking and finance. Because if you are talking about the contracts, it's just the matter of how are the contracts being played, and you have the Islamic banking products. But when it comes to capital market, you must have some other structures around this particular contract. Yes, I'm aware that other jurisdictions, they have different way of how they are regulating their activities. But when it comes to the opportunities in the training, for instance, we have different institutions, such as this particular promoter of this event that we are having, which is pre-conference webinar, as well as the conference itself. Metropolitan Skills has been dedicated in training both in capital market and in banking activities together with the Tekaful since 2008. So they can be contacted in line with that aspect if there is need for that. Likewise, there are other institutions that are providing, including us, 117, we do provide actually the training in line with whatever specifications in Islamic banking and finance that is needed, including the Sukuk structure in which we've been doing in partnership with the Metropolitan Skills, as well as Triple IBF that is based in Kano, which is the Bayero University, Kano International Institute of Islamic Banking and Finance. They are having also some certificates they are doing, including the PhD, which they are doing with respect to all that aspect. I'm also aware about the IIFP, which is the International Islamic Institute of Finance Professionals that just did their conference, of course, in Lagos just this particular week. I know that they've also have all these certificates they are providing that are tailored in different segments of the industry, including the capital market. So I believe it's just a matter of to contact probably the organizers or to contact anybody, or you do the Googling, you will see the local people that are providing all these particular services if you want to participate. And of course, there are a lot of webinars that are being doing. I cannot actually conclude this particular issue of skill development without telling you about what other regulators are doing, such as the Securities and Exchange Commission. I know that about 2 weeks ago, SEC realized that there are deficiencies with respect to the Sharia scholars in capital markets specifically. And as a result of that, they did about 4-day training program to people that are in need of being professional Sharia advisors, and it was done actually at the head office of the Securities and Exchange Commission here in Abuja, which is the second type of it they are doing, the first one being last year in November or October. So I know there are a lot of people that are doing this, and I believe gradually, if you are interested, you can get into some of the people that are doing it, or be provided with some links, or maybe join some of the friendship in some of the social media of people that are doing that. Because whenever there is this thing, you will realize that the IFING and others are sharing this kind of opportunities that are going to happen, whether they are promoting it or whether they are facilitating it or they are not. They usually share this kind of links. So just be a friend to some of the social media handles of these particular entities. Thank you so much with respect to that. That is what I can say on the skill development.
All right, thank you so much. Before I go to the second question, I think I want to implore SEC, FMBQ, NGX, and other players in the industry because this thing is very important. We need to try to standardize it. And I believe that is what Mala Ahmed Kabir is trying to emphasize, that we need standardization in terms of the kind of training you go to or you attend or so on and so forth. And I know all these entities Mala Attahiru Maccido has mentioned can be contacted, but be rest assured that there will be something that will be done about that. And I believe we can sort it out in the conference coming November, inshallah. The second question, I would direct it to Dr. Umar Oseni, because very importantly, we should look at the international field of people that have been issuing private sukuk, and how have they been able to do that, and how can we look at the regulation in court? To that. Is he on call?
It appears that no, he has dropped off.
Oh, he has dropped off.
I
think would have loved to hear that, but I think okay. Let's move on. This question really, I will take it up. Mala Ahmed, if you can do me a favor, let's meet in the conference in November. May Allah spare our life. Then you can physically, re-ask the question to these wonderful people, and the regulators will also be present. So do me that favor and try to be around, inshallah. So any other person who has a question?
Okay, so we'll take one more question from the audience and another question from the chat box.
Great.
Mr. Shehu Rano, you can unmute yourself and ask your question.
I think I will not say she said Mr. C. I know he didn't actually put professor. It's one of our mentors in this life.
Hello. Good afternoon.
Good afternoon, sir. How are you doing, sir?
How are you? I'm really very happy, and I feel honored and very. I've been well educated today by the wonderful presentations that I've been listening to all the time since it started, and I was very happy, especially the presentation that I made completely, the one by Mr. Ndako, and much as he has talked about. Well, he was a bit silent about the structure. I believe perhaps Dr. Umar Hussein or Professor Umar Hussein may have talked about that. And but much as the SDG are important, the Maqasid Sharia are also very important. And in his presentation, I saw that he has talked about some aspect of the SDG, and by no means exhaustive. He may have been constrained by perhaps the time factor, but then importantly, also the SDGs that are to do with sustainable environment, water and sanitation, energy and infrastructure. And in energy, clean energy, he has talked about the sustainable SRIs, social responsible investment, and the ESG, the environmental and corporate sustainable corporate governance. All these are very important, and to us, from the perspective of exploring investment opportunities for sustainable development in Nigeria, I thought maybe my expectation was tilted toward how do we identify A, B, C, D investment opportunities that are in sustainable development areas, in energy, for example. Energy has been a major challenge for Nigeria. And as the presentation was going on, I just looked at the Morocco solar, Noor solar plant that generates over 500 megawatts. And we have also opportunities for solar energy. And we have wind energy in Nigeria. We have marine. We have other sources, although they have their, but then these sustainable investment opportunities, I believe, while this is an appetizer in preparation for the conference, by the time the full conference comes up, we'll be looking towards maybe the conference papers, the lead paper presenters, identifying these areas of sustainable investment opportunities in Nigeria. We have seen the roads, we have seen the sub-level, the subnational schools, the private schools that are all coming up, which are very practical when you have people like Ndako himself and Maccido himself. So, but the real opportunities are out there that will lead Nigeria to the path of sustainable maybe development. And this is very important because the essence of that is to not only talk about the conventional infrastructure Sukuk, but also the ESG Sukuk, the different kinds of the ESG Sukuk about that are to do with the environment, that will not tamper with the environment, but rather help to promote the environment as we develop. I believe, like I've said, this is just a toaster and a preparation to prepare our mind to warm up our thinking and prepare our thinking towards what we'll expect at the upcoming conference in November. We are proud of Metropolitan Skills and all the resource persons that the firm has put forward for this presentation, and we really appreciate and we look forward to the conference, inshallah. Thank you so much, the Anchorman. Bisalam.
Thank you so much, Professor Rano. Himself. Thank you so much for your contribution. And I would like to give, let's give Mr. Ndako to respond. I know he might want to say one or two things in respect to that observation.
Thank you so much. You read my mind. Thank you, Mudathir, and thank you, Professor. Thank you for all the comments. I just permit me to touch on just one thing first, which was on the private Sukuk from the previous questions before I get into this one. Yes, it's important to have these conversations with the regulators, and all the agencies and advisors, as to how things can be standardized. It's important, however, to understand what a private market is. A private market is a market for sophisticated investors. So what that means is that those investors understand what is being transacted in the market, and they understand the risks, including the risk of Sharia non-compliance, right, that they are participating in. The reason why those markets exist is because for some sophisticated investors, they can do a certain level of due diligence by themselves. So they don't need additional levels of due diligence on those transactions that could make the transactions lengthier and potentially make them miss business opportunity. So yes, standardization is good, but having flexibility in the nature of markets is also important. And yes, private markets do exist outside Nigeria as well. So I thought it was important to mention that. On the structures, yes, it was deliberate not to go into structuring, but to show us the application of the structures in my presentation. Malam Attahiru did a good job mentioning most of the structures that we may or may not be familiar with, whether it is equity partnerships, Mudaraba or Musharaka partnerships, or whether it is transaction-based, either leasing or sale-based, or any of the other transactions. But for project financing, it's important for me to mention, because somebody asked about project financing, that project financing has been done using Mudaraba structures, even though some of those structures have not been done in the nature of Sukuk, but it's very popular within the real estate segment. Right, so it's not something that hasn't been done. It's something that is currently being exploited. Most times, the size of the transaction may not warrant you to have an instrument that will go public, but those transactions have also been done. And then to how we identify sustainable projects. One area is to look at the research of where we are deficient. What I try to pick out in my presentation is in areas such as healthcare, areas such as agriculture, and definitely there are other areas. And the case study for agriculture using AFEX was deliberate so that we can see how that has led to development in that segment. What we would have to do, and hopefully within the larger forum that would have more players, is interrogate ourselves to participate. So if I'm saying that we need to allocate more funds to primary healthcare services to reduce the level of maternal mortality, it will be nice to have somebody, the Ministry of Health, right, to say, we understand the importance of Sukuk in this area. We understand that there are experts in this room right? And we know what is possible. We want to become an issuer, right? And that was our charge at the end of the day. So now that you see how this can be applied, stand up, and bring yourself forward, and let us do this together, right? And I think the only other thing I'll like to touch on is in terms of capacity building for training. Capacity building is a journey. Our industry is not static. There are new things that are coming up. SRI, Sukuk, all those things. The beauty of having training companies like Metropolitan, like all of us that are here, is that we're constantly trying to update ourselves so that we can also update you, and the industry can grow in line with development outside the globe.
All right, I think thank you so much for throwing more light on that. And with this, I think Mr. Olufumbi, are we good?
I think we could take just one last question and then we could wrap up the webinar because it speaks to the topic of the webinar. So someone had asked to please share the dynamics of a typical Murabaha Sukuk. And since it's Sukuk structures we're talking about here, I think that it's good to just shed light on at least one of the Sukuk structures that are available.
Again, I think I'll throw this. Oh God, you know what we are going to do because of time? That question is a little bit broad, but if I don't want to bring Attahiru Maccido because both of them are talkers, But if Malam Ndako can please just a little bit highlight on this thing, and we can go straight to. I would like to take the last hand up because that is Dr. Hakeem Ablakim, I think of Ndako Capital. So go ahead, Mr. Ndako.
Okay. All right, inshallah. Right. So in Murabaha is basically a sale-based contract where one party is buying an asset and selling it to another party on a markup, right? And then the party that is buying pays back the sale price. The sale price comprises a profit element, and it also comprises the principal element, which is the returns that goes to the investor. So in a Sukuk structure, it's usually easy or nice and tidy to have an SPV that is created for this type of transactions to ring-fence the transaction and raise money from investors. So if I do a step 1, step 2, an SPV will be created. The SPV would raise money for the investors, right? That money can be warehoused, right? That money is then used to acquire commodities. The commodities are now sold to the sponsor of the SPV at that markup that we want to be our profit. The sponsor at the maturity date, say 1 year, 2 years, pays back the full amount comprising the principal and that markup, and the issuer, which is the SPV, distributes the funds to investors. A Murabaha has been used for the acquisition of commodities. A Murabaha can be used even in oil and gas transactions. It's very popular for oil and gas transactions. So it's a very simple structure. It's important to mention it's not a tradable structure because once the goods have been sold, it represents a debt instrument. It is tradable only at par, which nobody wants to do. So we just say it's not a tradable structure.
Thank you so much for being brief. I understand the constraint that actually put you there. So let's take the last question. We have Dr. Ablakim raising up his hand. Please kindly allow him to unmute to ask his question or contribute to this.
All right, Mr. Dr. Hakeem, you can unmute your mic and ask your question.
Thank you very much. Just confirming that you can hear me now.
Absolutely. Perfect.
Okay, thank you so much, and thanks for this opportunity as well. So mine is not a question. Mine is to just add a bit to the comments and the remarks by the professor, especially as regards SRI, SDGs, and the Marcos Sharia. I mean, what I would like to add is that Islamic finance, as it's developing in Nigeria, is actually developing at a very, I would say, a good space. I will also say that because there are many facets, in the development of Islamic finance in the capital market, especially, the practitioners have tended to develop the aspect that we call the low-hanging fruits. And that is what we've been discussing about the issuance of the Sukuk. I mean, what Ndako and what Attahiru spoke extensively about, in a very commendable manner. So I would say that perhaps the next steps that we need to get into are areas of applying as much as possible the Maqasid, Sharia, and also the SDGs, and giving people the opportunities to be able to churn out instruments that are ESG aligned and are also allowed, which most of the time are likely to be, but we are yet to see that. In Nigeria, for example, we only have one approved ESG fund, but it's not a halal fund. So, I mean, maybe most market players don't know about it, but it says to us that there's an opportunity, and that is what our religion, pushes as well. There are many areas of the Maqasid that we can align, even with the SDGs, that we can come up with instruments, use a number of even work-off structures that will allow people to make some investments, in a way that they'll be getting the returns, but also will allow us to achieve specific areas. The Maqasid, Ndako mentioned about primary health. That is one area. We spoke about the area of the solar systems, solar powers in Morocco. We have the KKK in the northern part of Nigeria, and the opportunities there that could be easily financed by solar system and also by an Islamic structure in a Sukuk manner. So I'm saying that perhaps we have already unblocked the low-hanging fruits. I mean, FGN has been issuing series of Sukuk. We now need them to issue a lot more green Sukuk. We also need to go to the private sector and ensure we do a lot more of that and tie it in specific terms, build a massive hospital and let it be, structured via an Islamic instrument that will allow people to participate, both from an halal perspective and also by engaging one specific area, which is protecting life among the Maqasid. So I think now we should be a bit more innovative, we should be a bit more daring, and I think the market is still there. In the guidelines by the pension regulator, PENCOM, it's actually specified that PFAs are being encouraged to look for sustainable investments to put funds in. And I mean, when you say sustainable investments, you would not be wrong by aligning those with Maqasid, because essentially that is, the home turf of sustainable investments. So I just mentioned that we have more to do. Maybe we should be a bit more aggressive, a bit more innovative, and just be more intentional in growing the markets, in the more challenging areas. Thank you so much, and thanks for the organization of this program as well. Assalamu alaikum.
Thank you. Wa alaikum salam. Thank you so much, Doctor, for the wonderful contribution you've made. I mean, it's a wonderful call to all of us. We need to be more aggressive. To be honest, we've really plugged all the low-hanging fruit, like you said. So I would, with this, I will round up by giving the facilitators of this wonderful webinar to actually give their closing remarks, and then we will have a message, and I think we'll close for the day. So let me allow the facilitator first, Malam Ndako Mijindadi, to go first. Then later we have Malam Attahiru Maccido to close. Then we close for the day.
Alhamdulillah Rabbil Alameen. I would like to say a big thank you to Metropolitan Law Firm, Metropolitan Skills, for the organization, to our great coordinator, Mudathir, and Dr. Umar, Attahiru, Dr. Akim, brother, and all those who have contributed and participated up until this point. I think the message that we're trying to pass across is very clear. What we're trying to demonstrate is the flexibility of an instrument, but the fact that it has to be applied to a local context for it to remain relevant, and how best to remain relevant than to align them with SDGs, right? And we've given a number of role given, and I'm sure all of us can come up with different examples of how that application can be. I would like to say that what we have to do is actually not more challenging, but actually easier than what we've done before. If you look at what we've been able to achieve, getting a sovereign to move, right, getting regulators to move is very different from getting private sector to follow sovereigns and follow regulation that has already been created. So my view is that what we have to do is the icing on the cake, right? It's not heavy lifting, right? Heavy lifting has been done for everybody's benefit. Now it's the icing on the cake that we can all benefit from. So it's not a hard hurdle. It's a good challenge, and I believe that we can do it together. So Jazakumullah khairan, everybody, and thank you so much for paying attention.
Thank you so much, Walam Ndako Mijindadi. Attahiru Maccido.
Thank you so much, Brother Mudathir, and thank you so much, Metropolitan Skills, for providing this. This is what we really need, because when we are talking about Islamic finance, I want to climb on the Ndako's closing remark that awareness is very critical. Yes, we already passed all the necessary hurdles that needs to be passed by having the regulations, by having the other issuances already in board. Now it's just a journey that we must continue being, because regulators need to always consistently needs to continue building their capacity. We need to also have our operators both in the money and capital markets to also continue creating their awareness. The potential issuers of Sukuk are equally needed for them to understand this particular trend and also knows the benefit of sustainability attached to the Sukuk issuances. The investors that are also there, probably the inclusion that Sukuk is coming along with is equally important for the investors to know, especially the conventional bond investors and the other investors that are needed to be done. And of course, the general public, in order to understand that this is here and it is actually Islamic capital market, Islamic banking and finance that is needed, and it is going to come in line with the necessary requirements put by the Securities and Exchange Commission in their 10-year master plan of achieving at least 25% of the total market capitalization by the year 2025. This is what we can do, and I believe it's something achievable. Malaysia, even though they came a long way, but they are controlling about 60 to 70% of their capital market to have all the Sharia compliant instrument as the total asset under management, as the total asset of that particular market capitalization, 60 to 70%. So if Malaysia, with of course a long time ago, can achieve this, Nigerian can equally, with only small push, can equally have that 25% that we are earmarking in the next 2 years, inshallah already. Thank you so much for having me to contribute a little about all these issues. Thank you, Mudathir.
Thank you so much, Attahiru Maccido, for your great closing remark. We've come to the end of this wonderful webinar, and I believe most of us don't want this to end, but be rest assured, it's just like what Professor Radu said. This is just like a taste of what you are going to get at the upcoming conference, say November 14th and 15th, organized by African International Conference of Islamic Finance, ISEF. To register, you can go to isef.org and get registered. It's going to interest you to know that most foreign companies, organizations, regulators, and in-house regulators, which I mean local regulators, and also the players will be present at that conference. It's very important. If you have the time, spare time to actually attend that conference, it's going to be wonderful. And another thing I want to add, because it's going to be of beneficial to every one of us, let's also look into HMOs. It's very important. HMOs hold a lot of key into our health sectors, and Islamic finance can actually tap into this to have for us to have good financial inclusion. That's number one. Also to also look into how we can get more people to register for NHIs. In future. So thank you so much. I thank all of you participants for sparing time from your weekend to join this wonderful webinar. And most importantly, I thank the facilitators. They've been wonderful. All what they have presented have really held a lot of value. I want us to go back. We will send you the links to the video to rewatch and rewatch to be able to take one or two things out of it if you've missed. Inshallah, Kratullah. So, and I would like to thank the organizers, Metropolitan Skills Limited and law firm, and in person, Mr. Akpata Fumbi, and also our Eden Madam Laifa Idolo. Thank you so much. And I would say join us on the 23rd of next month before we get to we'll have another series on the 24th of next month, before November. That will be talking about the Waqf in general, looking at the opportunities in Waqf. How can we structure Waqf? Looking at the international field, and also we'll look at the inner opportunities in Nigeria. And that will be presented by Dr. Ziad, and also supported a discussant, a wonderful person, Amir Maccido, Amir Abdullah Lamido. I mean, the name is confusing, Maccido Lamido, sorry. It's a little bit confusing, but Lamido from Gombe, the Amir and the chairman of Zakat and Waqf of Gombe State, they will be slugging out, looking at the differences and how we can actually use Waqf effectively in structuring products. I mean, even Sukuk Waqf, I think we have anything like that anyway. So thank you so much. And I would like to say, please enjoy the rest of your weekend. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Jazakallah khair.
Thank you. Thank you so much.